Good morning, everyone. Welcome to this new edition of the morning briefing. Let's get started right away. Here we are. Let's do a recap. A bit of what happened yesterday. In short, a day that first saw, just a moment. I just want to remove this. Otherwise, here we go. The day when there were these data that was quite positive, the market reacted immediately. Pretty well, though. Then the trend has been, if it has remained the same as in the last few days, so there was this attempt to recover. But then the markets pulled back. If we take a moment to look at the situation from a broader perspective, starting from the highs, for example, the S&P, the Nasdaq has pulled back about 10%, while the S&P has dropped around 15%. That's why for many, these seem like very interesting levels for a buy the dip. As usual, trend, in these declines. Honestly, it's a bit different from the last times. I don't know if this time, this is really the bottom, because there are still too many variables, in my opinion, to determine. And this could definitely lead to further declines, while still keeping in mind that this is certainly a point where many, are starting to reposition themselves. Either way, either one. They are starting to reposition it's a whole situation, but I repeat, I would wait a little longer for some clouds to clear up a bit more, especially in Europe. There's a lot going on fire. The game is being played in Germany with this spending reform that goes to reform the constitution, because there is this thing included in the constitution regarding spending limits. We'll see if they manage to make this change. And so this could definitely lead to another upward surge in European stock indices, particularly the DAX. But it could also be essentially a trap, because in the last period, if we look at the spread between, for example, the DAX and the S&P, we notice that the DAX has outperformed the S&P by about 15-20%, about 15 to 20%, a nice outperformance. So it could also be that right now the operators have already appreciated this. In short, in the values of the DAX, so we need to be, that's why I'm optimistic, because it also seems like a nice scenario there. The fact is, if this thing were to be approved, it would lead to another upward surge, so another upward progression of the European markets. But I'm afraid that they are probably part of this situation. It might have already been appreciated, so in moments when it's already valued, the situation could definitely turn around, because there might be a good breakout, still going up for new highs, trap a lot of people. Then the big players come in to create the climax, because they would never sell low. In short, they would practically trap everyone. We'll see, what the scenarios will be that unfold. So, having made this brief overview, another important point is that, there's the rollover for futures today. They're rolling over. So for those who trade them, it's about futures on currency futures. So on the euro, dollar, and so they're rolling over AS, Russell, and Dow Jones. The Nasdaq will roll on Tuesday. Then the March contracts will remain tradable until next Friday, when there will be the pro-witching picture. Well, front contracts, starting from Monday, basically starting from today, are already front contracting, not on Russell and Dow Jones. They are front contracts and the June contracts. But for today, I'm still trading the March ones. Starting Monday, I'll switch everything to June, including the Nasdaq. I said this. It seems to me that I've said it. In short, Pochettino summary macro themes. There is no relevant macro news today after the opening. So let's shift a bit from a technical perspective to analyze the situation. We see that the Nasdaq at the moment has recovered. There was a double bottom in the evening, which contributed to this recovery. We are currently trading above the HV levels of today, close to the levels of the about the BC300 indicator. It would be important to get back in, if we could get back into this range, because from there we could definitely try to push towards the highs. We'll see. If, it won't just be a bounce. Don't say, like a dead cat bounce. In short, there was a bit of excitement, but basically, the situation hasn't really changed much. It hasn't changed significantly. Right now, we've hit these lows, basically moving sideways over the last few days. We've stayed in this range, so we could also continue to move sideways for a few more days. So we're absolutely open to any scenario. Speech, obviously. Similar. Also, for the ES, which is currently trading above the red D1. So there's a bit of recovery excitement. Oh, of course. Just like we mentioned at the beginning for this occasion, because maybe the market at this moment, it's hypothesizing the hypothesis. He is hypothesizing that this market pullback might be over. And so some people are starting to reposition themselves. And this means that right now, even yesterday, there was a bit more excitement in the recoveries, although the overall trend has remained bearish. We will see if this trend will remain and the sellers will pull back to higher levels. We can also hypothesize a recovery up to 5.758 for, let's say, for S. This area here, it could be the area that will then be attacked again by sellers, like, for example, for the Nasdaq, that I didn't show it. First, it could be the area of the 2320 and 223. In short, this area here could definitely be a place where the sellers would reappear throughout this area. Here, we'll see what the developments will be. Let's take a look at the other two. Dow Jones indices. He's also, quite lively, making a recovery. In short, the RD0 and RD1 levels have been recovered, at least for the moment, even if it was during the nighttime phase, let's say. For the Americans, there's a bit of an attempt here to recover. An important level, of course, to break, which corresponds to these lows. Here, a break of this could definitely lead to a test of RD2, where then, another battle tends to take place. Because there are a few lows here, so this one is definitely, it will be harder to break, but if the market decides, then they just take their time. They'll definitely get overwhelmed. Let's also take a look at the Russell. Here it is. Fortunately, yesterday, it then managed to recover the 2000 area that we had pointed out. In short, it had gone below it, fortunately. Let's hope it's a false break. I repeat, also because of the policies of the Trump administration, which would like to favor more small and medium-sized businesses. So really focusing on coming from the previous administration, which instead aimed to favor the big Wall Street companies, to the Trump administration. In short, in his plans, there's actually the intention to favor small and medium-sized businesses. American. That's why, I still consider the Russell my favorite, in terms of recovery. We'll see if I'm right about this reasoning. Fact, which I have reiterated several times. I was saying from a technical standpoint, it has managed to recover 2000. Now it's trading at 215. So let's see, obviously here too. these are the levels. They clearly seem to be those of the VIX area, and the highs, the ones to break for an actual attempt at recovery. We'll see if that happens. Let's take a look also at an oil, as always. Right now, it's trying to recover, because even yesterday, despite some glimmer of peace, from a macroeconomic perspective, it has not brought any benefits substantial, because the price continued to fall. Even yesterday, it recovered during the night and then reestablished it. We'll continue to stay in this sideways trend, which we've been in for a little while now. So we keep working in this sideways trend probably. So let's go back to the chart, or I'll show it to you. Let's say sideways. So there's been a descending sideways trend, but now the price is kind of stabilizing. Here it is. This is its K1. So we've already been in this range for a few sessions since Tuesday. We're continuing to work in this region. Of course, a breakout of today's highest area could certainly give a recovery towards the 70 area. But of course, we need to break through this area between 67, 80, and 68, and 68 and 60 and 50 though. And 60 and 50, obviously, we need to keep an eye on 65.30 for a potential drop. Where did this nice formation come from? So a double bottom tested twice, thanks. So a stochastic break of this level would definitely lead to further movements. Let's also take a look at gold, which finally broke that channel yesterday. So it then went to the target that we've pointed out time and time again of this range. It also broke yesterday, which I had indicated as a retracement. So right at the highs where the Beast 3 levels were, from which the bullish push that drove the prices started. So right where we expected it in the area. 3,000. We'll see why, how the stock markets will react to all these developments that are coming. And this will definitely also mean, consequently, monitor this situation with them, which definitely tends to rise if things for the stock markets and the economy in general don't turn out for the better, to get better. With this, I believe I've reached the end. I think I've mentioned everything. Then there are the rollovers with the various points. Maybe we'll update them Monday. I haven't done the calculations in my head yet, but they should be precise like that. And they should roll with a difference of 54 points. The Russell 17, 330, the Dow Jones, and the NASDAQ. Honestly, I don't remember it right now. I have it on another computer. Well, anyway, then it rolls Tuesday. With this, I say goodbye. I'll keep you updated, of course. I invite you, of course. As always, follow me on social media, leave a like on the video, and we'll catch up later in the chat. And once again, thank you for your attention. Happy trading, and keep an eye out, because today is Friday. So protect your psychological and financial capital. Thank you all for your attention.